Let's get a market master in because the markets are at a very, very interesting stage. Andrew Holland, CEO of Ambit Invst Advisors, is our market master for the morning. Good morning, Andrew. Very good to have you at what's a very, very interesting juncture in the markets. It's clearly awash with liquidity, and that's taking the tide. The high tide is taking the prices higher. But at what point will the skeptics say that it's time for profit taking? Do we still have another good 10-15% in this quarter itself before profit taking comes in seriously?
Yeah, I think that will come from global cues, Lata. I think that's what we'll have to kind of manage between now and the budget. I think by the budget, the Nifty will be around 9,000, between 8,500 and 9,000 is my view. But just leaving aside the global factors for a second, and I will come back to that. I'm sure you've got some questions on currencies. You know, over the past few months, I've been traveling around meeting a lot of high net worth individuals, business people. And the thing that's coming out, and the statement that they're making, which is very important and very powerful, and what they're saying to me is that, you know, I'm proud to be Indian again. And it's a very powerful statement because, you know, I think it lends itself to, you know, to a different India. I remember this in kind of my UK days in the markets under Margaret Thatcher. It's a very important and powerful statement people are making, because maybe apart from obviously optimism towards the economy, you know, the harder reforms which Prime Minister Modi has to push through, like land acquisition, GST and land reforms, maybe might be a little bit easier, given that people's views are so strong towards you know, being proud to be Indian again. It's a very powerful statement, and I think that will hold us in good stead even through turbulent times in global markets.
Andrew, hi, good morning. Wow, that is indeed a very good start to our discussion. I mean, we've been hearing a lot of positive sentiments, but this one tops the list. So what does an average investor who's perhaps missed out on a large chunk of this rally do now? Is it still a good time to be buying India? And if yes, what should be the pockets one should look at?
Okay, so I'll answer that in two ways. First of all, you know, given what we saw with in Japan over on Friday, what I think is going to happen now is that the ECB are going to do some easing themselves. So in terms of currencies, what you're going to have is probably a US dollar to yen of about 120. You're probably going to have a US dollar to euro of about 120. And who knows what the Chinese are going to do. And I think that will play out in the currency markets and the commodity markets, and I see oil prices coming down further, because I'm not sure it's a supply problem, I think it's a demand problem. So when we wake up maybe in the next few months and see that, you know, you have negative rates in you know, virtually the US, Europe and Japan, and you know, you're looking for yield and growth, and India is going to tick the boxes you know, very clearly. And what I think that also means is that the RBI here, and I'm going to stick my neck out a bit here and say that I think the next cut that they do will be 50 basis points, because I think the US will not rush to increase interest rates, because every currency is depreciating against them at the moment, so they don't want to exacerbate that situation. So that will push the expectations for interest rates in the US rising. All of this leads to obviously lower commodity prices for India, which is great news, and the operational gearing of India is huge, and so is financial gearing. So the earnings story for a domestic India growth story is going to be compelling. So we've been playing a theme which is, you know, buy suppliers. We think, you know, anyone who's supplying India across all the different sectors, if you can identify those companies, that's where you're going to make the big returns over the next 2 to 3 years.
Okay, well, you spoke about Rajan's next move being a 0.5% cut. When, you didn't say?
I've been actually, you know, thinking it's more like second half of next year, but now I think it's probably first quarter of 2015. I think the global environment will give him the opportunity to do that, because I think there's a demand problem in China, which again I think will play out through the currency. And I think, you know, you might see China themselves trying to reduce interest rates and get the yuan to depreciate as well. So everyone's going to want to be an exporter. Fortunately, India is a domestic growth story, not an export story.
Well, if you're playing that kind of a theme, how will that tweak your selection of stocks? Because you're expecting an 0.5% rate cut, will NBFCs now get a bigger look in, or even for that matter, public sector banks?
Yeah, we've been looking at the banks a little bit more closely. I'm more towards the private banks than I am the PSU banks. I don't mind renting the PSU banks, but I still don't want to own them. But obviously, we think it's a story which will play out over the next 2 to 3 years. I'm going to get a lot of supplier bank shares, that's for sure. So I'm not sure that I want to. This is not the sector which I'm saying I want to bank on right now. It's more the suppliers in areas like auto parts, the power sector, and so forth. It's where you're going to see investment expenditure by the government over the next 6 to 9 months, and where you're going to get the kickstart to the economy, and that will have a multiplier effect. So the banking sector nibbling away at some of the private banks, but really PSU, it's only on market rises that I want to play that sector.
Okay, Andrew, we actually have a segment where we post some of our money control boarders post their queries to you. So let me just get one of them up on board. Inder Preet has written to us from New Delhi, and she asks us, or he, I'm sorry, what is the outlook for Suzlon Energy? Considering the fact that Suzlon has reported a third consecutive quarter of an EBITDA growth, is this a stock that you would look at now with a constructive view for the long term?
I'd have to have a leap of faith in terms of the management and how the management is, will take the company going forward. It's one of those stocks which can easily kind of move higher in a lower interest rate environment. But really, you've got to go back and say, what is the business model? How will the company grow? And will they make mistakes of the past? And I think if you're clear on all of those, then it's fine. I can't say I'm clear on any of those apart from interest rates coming down, which will help their financial gearing, which is not really growing your business. So it's not one I would focus in on at this stage.
Can I dwell a little more on the fact that you said we should look at the world, at the global cues for when profit-taking might come? When do you think that might come? I mean, at $87.2 index, it will be only a matter of a month or two before it will start showing in U.S. trade deficit numbers. Clearly, their imports are going to get impacted. I mean, their exports will be hurt. There should be more imports. And you're speaking about a 120 on the yen and maybe a 120 on the euro itself. I mean, where do you see the euro itself going? What's your sense as to when the global correction might come?
Timing of this is always very difficult. I think between now and the end of the year, we'll enjoy more liquidity and liquidity-driven markets. I think come January, we might, trying to enter 2015 a little bit more sober and realise that, currencies are where I think they are, with the expectation that China could also be joining the game of trying to devalue their currency. Then that might bring a lot of kind of turmoil, uncertainty and risk off, which we saw recently, and I think that could play out more in January than it probably will by the end of the year. But certainly January would be a time when, towards the end of the year, will be a time when I'm looking a little bit more closely about what's been done or what's expected to be done by some of the major regions, because we're living in the two-speed world at the moment, the US and everyone else, and certainly the central banks are trying to play their own strategy, which is completely different than anyone else's strategy. So it's all about defending their own currency or letting their currency help on their export markets. And clearly, when you see Germany reduce their GDP figures from 1.8 to 1.2 and 2 to 1.3, it's very close to stagnation in terms of growth. So there's a lot of problems out there, but I think for the moment we'll enjoy liquidity-driven rally towards the end of the year. But as I said at the very beginning, I think India this time around will stand out. It won't be able to withstand a global kind of sell-off. But I think with the powerful statement that people believe in what the changes that are going to take place in India, I think will continue to attract foreign investors and, more importantly, foreign direct investors.
All right, Andrew, thanks for giving us all these cues and these very positive statements that you've made
Andrew
today.
is sounding more proud of being an Indian than I've heard many Indians sound. Thank you very much, Andrew, for joining us.